Ever wondered if you could make your crypto portfolio work for you 24/7 even while you sleep? In today's video, we're diving into the powerful world of trading bots and how they operate across platforms like Binance, KuCoin, and various DeFi protocols. Whether you're just getting started or looking to automate like a pro, you're about to learn game-changing strategies that can seriously upgrade your earnings. Stay locked in as we explore the tools and tactics used by smart investors to win in today's volatile markets. If making your money move smarter sounds good, hit that subscribe button now, and let's unlock the future of automated crypto trading together. 1. Understanding what trading bots really do. Trading bots are automated software programs that execute trades on your behalf based on predefined criteria. They analyze market trends, price movements, and technical indicators in real time. Their goal is to eliminate emotional trading decisions and stick to logic and strategy. These bots can monitor the market 24/7, making trades faster than any human ever could. Some bots are pre-programmed, while others can be customized to match your trading style. They can follow simple strategies like grid trading or complex ones like arbitrage. Knowing what your bot is doing and why is crucial before letting it handle your funds. Without a proper understanding, you're basically gambling instead of investing. It's vital to read up on the logic and mechanics behind your chosen bot. 2. Choosing the right platform. Binance, KuCoin, or DeFi. Not all platforms are created equal when it comes to trading bots. Binance offers vast liquidity and a wide variety of supported bots and APIs. KuCoin has an easy-to-use interface and several built-in trading bots for beginners. DeFi platforms like 1inch or Uniswap require more technical knowledge but offer decentralized freedom. The key is choosing the platform that fits your trading goals and comfort level. Centralized exchanges offer more stability but come with custodial risks. DeFi offers transparency and control, but needs strong wallet and security management. Platform fees, bot integration features, and API reliability also matter. Always test your bot in a sandbox or with small amounts first. Look at community feedback and bot performance reports before trusting your capital. 3. Setting up API keys safely and correctly. APIs are how your bot communicates with your exchange or DeFi platform. To enable this, you'll need to generate API keys in your platform settings. These keys act like login credentials for your bot to view your balance and place trades. Always limit API permissions, enable trading but disable withdrawals for safety. Store your keys securely using encrypted tools or password managers. Never share your API keys with anyone or store them in public code. Use IP whitelisting if the exchange supports it, restricting access to known addresses. Always rotate your keys periodically to reduce risk exposure. Treat your API like digital gold. One leak can cost you everything. 4. Picking a strategy that matches your risk level. Every trading bot follows a strategy. Your job is to choose one that fits your risk profile. Low-risk strategies like dollar cost averaging reduce exposure to market volatility. Grid trading works well in sideways markets, but can struggle in high volatility. Arbitrage bots take advantage of price differences across platforms, but need lightning-fast execution. Momentum or trend-following bots chase upward movements, but risk getting caught in reversals. You can also build custom strategies using technical indicators like RSI or moving average convergence divergence. The important part is backtesting and paper trading before going live. Never let a bot run a strategy you don't fully understand. High returns come with high risks, so tread carefully. 5. Backtesting. Your best friend before going live. Backtesting is where you run your bot's strategy on historical data to see how it would have performed. It's a crucial step before risking real money in the market. Most reputable bots and platforms offer built-in backtesting tools. Always test with accurate data that includes slippage and realistic fees. A strategy that works in theory but fails in practice can drain your account. Look for consistent profitability across multiple timeframes and market conditions. Don't just rely on one strong result, diversify your tests. Try bull, bear, and sideways market data to test resilience. Adjust and refine your bot settings based on test outcomes. 6. Monitoring performance and making adjustments. Launching your bot is just the beginning. Ongoing monitoring is essential. Track performance metrics like win rate, drawdown, and profit factor daily. Many bots provide dashboards with real-time performance data and logs. Be ready to tweak parameters like stop loss, take profit, or trade size. Markets evolve, and so should your bot configuration. If the bot underperforms during new trends, don't hesitate to pause and re-strategize. Avoid the set it and forget it mindset. Automation isn't immune to failure. Schedule weekly reviews to assess alignment with your financial goals. Even automated tools require human oversight and risk management. 7. Managing risk with proper capital allocation. Just because a bot can trade 24/7 doesn't mean it should use all your funds. Divide your portfolio and only allocate a portion to automated trading. Set strict rules on maximum daily losses to avoid emotional panic. Use features like stop loss and circuit breakers to control runaway losses. Don't risk funds you can't afford to lose, especially with high volatility bots. Make sure your bot settings reflect your overall portfolio strategy. Avoid over-leveraging, even if the bot promises high returns. Spread your risk by using multiple bots with different strategies if possible. 8. Using free paid trading bots. What's the difference? Free bots can be great for beginners, but they often come with limitations. They may have fewer features, slower execution, or lack community support. Paid bots like 3 Commas, Crypto Hopper, and Trade Santa offer more customizability. Some paid bots have proprietary strategies backed by data science. Weigh the subscription fees against the bot's potential returns. Don't assume paid means better. Test both to see what fits your goals. Look for transparent pricing and refund policies in paid services. Join online communities or Discord groups to get honest user feedback. Some platforms offer trial periods. Use them to evaluate before buying. 9. Staying updated with bot and platform changes. The crypto world evolves fast. What works today may not tomorrow. Exchanges regularly update APIs, trading rules, and fee structures. Your bot developer may push updates or fixes that need your attention. Join mailing lists, discords, or forums to stay in the loop. Make it a habit to read patch notes and changelogs for bots you use. Regular updates can fix bugs or improve performance metrics. Always update your bot through official sources. Never trust third-party links. Sudden market changes or news events might require urgent bot strategy changes. 10. Knowing when to pause or pull the plug. Not every market condition is ideal for bot trading. Knowing when to stop is critical. If your bot starts consistently losing or deviating from its metrics, pause immediately. Avoid chasing losses by upping trade size. It only worsens things. During extreme volatility, consider switching to manual control or stablecoins. Regular reviews help identify when a bot is no longer effective. Set performance benchmarks and stop the bot if it drops below them. Don't fall into the trap of emotional attachment to a strategy. Be willing to shut down underperforming bots and try new ones. You've just unlocked the power of trading bots and how they can transform your crypto strategy across Binance, KuCoin, and the exciting world of DeFi. But remember, automation doesn't mean autopilot. Smart setups, constant monitoring, and solid risk management are the real keys to success. If you found value in this video and want to keep leveling up your crypto game, be sure to subscribe right now so you never miss a step in your journey. From beginner to expert, our channel is your go-to source for staying ahead of the crypto curve.